Hey everyone, so welcome. My name's Lawrence Jones. I'm the Americas Regional Director here for FIX, and I also co-chair a number of our working groups here at FIX, most notably the Global Post-Trade Working Group. Just some housekeeping quickly. So you're all going to be on mute. You do have the option to ask a question. You can do that. I believe there's a button which is to raise your hand. If you want to ask a question, we will get round to those. If it's relevant at the time, we'll do it at the time. If not, we'll try and leave all questions until the end. So we've got a very good topic today, something that's very relevant in the industry, and we've got a set of very good speakers. Firstly, I just want to thank R3 for sponsoring this session, so thank you to R3. Now we're just going to get into the panelists to introduce themselves. So I'll let everyone introduce themselves individually. It's often better that they'll do a much better introduction of themselves than I will do of them. So how about we start with you, Alyssa, and then we'll just kind of run through the panelists in order as they've come up on the screen.
Super. Okay. Hello. My name is Alyssa DiCaprio. I am the chief economist at R3. And R3 is an enterprise software company that builds the blockchain called Corda. We started as a consortium of about 42 banks, working with them to figure out how DLT should be implemented or could be implemented. And we've now evolved into kind of a very specific focus on building the blockchain that is suited for regulated financial institutions.
Excellent, thank you. And it looks like Martin's next. And Martin, you're on mute. So you want to...
So hello, everyone. My name is Martin Weidhofer. I'm representing SIX Digital Exchange. We are the first regulated CSD and integrated CSD and exchange in Switzerland, fully based on the value chain based on distributed ledger technology. And I'm responsible for the digital security space in EMEA. And with that, over to
Basu.
Basu.
Hi guys, morning everyone. Thanks for joining today, and again thanks to R3 for sponsoring. My name is Basu Chowdhury. I run the partnerships and alliances function within Austria. We are an operator of networks in the wholesale derivatives market. We service banks and buy-side firms, investment managers, hedge funds, and glad to be part of the conversation today.
Excellent, thank you, Basu. And last but not least, Yusuf.
Hello, my name is Yusuf Aitkin. I'm CEO and co-founder of ExactPro. We are software testing business working with exchanges and clearing houses in more than 20 countries. Over the last 12 years, we participated in most transformational projects in our industry, and DLT implementation is not an exception. ExactPro is involved in some of the most ambitious attempts to implement DLT in FMI space in Europe, in Australia, and elsewhere, based on free technology, based on less established frameworks as well. In fixed trading community, I am responsible for a working group called MOST, focusing on monitoring, onboarding, simulation, and testing. Thank you.
Excellent, thank you, Yusuf, and thank you, everyone. So we're going to jump right into it, but first things first. If you kind of look at the words and the terminology that get kind of thrown around in the industry today, the term blockchain, the term DLT, over the last 5 years, particularly in the retail space, they have been, I'd say, more heavily used, but now definitely moving more into the institutional space, we're seeing the usage of that increase. So I'm going to ask all of you 2 questions. The first one is going to be, what does DLT mean to you in 1 word? And then the second is going to be, what does it mean to you in 1 sentence? So we'll do a little round robin, a little quick fire. Hopefully none of you, well, if you do have the same answer, that's not a bad thing. But it's always good to kind of have different answers. So Alyssa, we'll start with you, and then we'll kind of just go around along the speaker chain. So what does DLT mean to you in 1 word? And then what does it mean to you in 1 sentence?
I think one word is really easy because it's going to be terrible for everybody. Database. I mean, it's a compound word, but I think it still counts.
It counts.
And in one sentence, I guess, you know, something like a system for recording data that holds it in multiple sites, which is cryptographically secured, making it difficult to hack. That's my attempt.
That's a good summary. No, I think that's very good. Better than I would have done. And Martin, how about yours? One word and one sentence.
Maybe I come with a more, let's say, business-driven answer. The one word would be institutional adoption. And with one sentence, DLT, basically in the FMI space in Switzerland, we started the first fully regulated exchange and securities depository, which is a major breakthrough in the FMI industry globally. And and with that comes also institutional adoption that I just try to use as one word.
That's definitely two words, Martin, but we'll probably let you have that one because it's relevant. And Basu, how about you? What one word? Just try and keep it to one word and then one sentence.
I'll do two. Peer-to-peer. So what do I? Okay.
We'll let you have that.
So I think what obviously DLT has done, it's allowed, you know, it's allowed the creation of a new asset class, I think, first and foremost, but actually more importantly for me, it's allowed for direct client services, direct interaction, you know, within the traditional sort of financial markets.
Okay, great. And Yusuf, how about you? Last but not least.
My word would be POC. Not sure if it counts. Proof of concept.
It's a smart one, an acronym. I like it.
Yes. In a sentence, so everyone is trying to prove that the pin works rather than building a production-grade implementation. In most cases, to build a regulatory-grade product, one needs to explore all the ways it does not work. But even within institutional space, most of the people are still focusing on proving that it works somehow. So POC is my word.
Excellent. Thank you. So we had a combination of 1, 2, and 3 words, as well as an acronym. So I think we outdid ourselves on that first question, but all very relevant. And I think some really good answers there. So we'll get on to the next point. So if we look at kind of DLT today, what do you think some of the challenges are that it can solve? Obviously, people in the industry are definitely starting to adopt it now. And why do you think DLT is a good solution for that? So Martin, how about we kind of get you to kick that one off? So kind of what are some of the challenges out there and why is DLT a good solution to some of those industry challenges or problems that are out there?
Happy to start with this one. So basically representing a fully regulated FMI and infrastructure provider in this call today, I think let me start with this quick summary that we basically saw for the first time for digital assets, a full value chain built on distributed ledger technology, ranging from the possibility to issue, custody, make digital assets transferable, but also, of course, tradable. Plus the question on how to tokenize fiat currency on a DLT in a regulated FMI space was a major breakthrough. And with these, so the question is, what does it solve and why distributed ledger technology? I think from my perspective, having digital stocks and bonds on DLT, it suddenly gives the possibility to create what we like to call intelligent securities. So you basically issue and create a native digital security on the distributed ledger technology on a platform where you suddenly can bring much more data and intelligence into such securities. And maybe give you some examples. Think about ESG data, or also think about securities itself as a single source of truth or single source of information, where suddenly, for example, corporate actions, stock splits, and so on, all that data and intelligence get put into securities. So suddenly you can enrich in the security space individual securities with much more either optimized processes, data, and also enrich the data like with prospectuses and so on. But maybe coming back to the question, what does it solve? And some of that, what I just mentioned, will be seen in the medium and long term. But in the very short term, for example, settlement risk, how to mitigate settlement risk, because one of the very obvious efficiency gains that can be seen here in such a value chain is settlement with atomic swaps. Yeah, so you basically have direct settlement, delivery versus payment, instant on an atomic basis, which makes basically central clearing parties obsolete. Yeah? And with that, that's something that's implemented already by now. So, and that's kind of the first very obvious use case and efficiency gain that can be seen. So hope that answers part of the question.
Yeah.
Then maybe.
Yeah, no, definitely lots of good things there. You know, ESG, you mentioned corporate actions, you touched on the settlement piece, which is very relevant right now. Anyone else got any kind of views on that?
I guess, Lawrence, I think the one thing I will add is what the DLT has allowed is for firms to really overhaul their back-end technology and their operating models, you know, where for decades they haven't been able to really, you know, put in the same kind of investment as we've seen in the front office, you know, technology stack in the front office sort of processing. And so, you know, this new technology has allowed for firms to really, you know, look at their post-trade ecosystem and effectively link in, you know, the back end direct to the front end, where you know you have effectively similar types of processing speed, processing sort of power, and so that whole overhaul of the back end infrastructure is really, I think, crucial and key to what, you know, DLT is sort of providing to the financial markets, really.
If I could chime in there, I think, you know, related to what Basu was saying is this is also what DLT provides, not the technology itself, but the fact that it's happening everywhere all at once. It's global. It's in every company. It's I think one of the first times that we're seeing this openness to updating these back-end systems with a new type of technology everywhere. Instead of, you know, maybe one company trying it and everybody kind of complaining about it. So there is this I think large opportunity as a result of how this developed. And then also kind of going back to what Martin was saying as well. I think, you know, the two things that it solves, or, you know, sort of reducing these, would be speed and credibility. So we have this whole movement from, you know, T2 to T1. Blockchain immediately allows you to do T0. You know, how much we want to implement that right now is debatable, but it does give you this additional tool. And then just credibility. I mean, talking about ESG, I thought that was a great example. You know, today, if you have an asset that's defined by its ESG credentials, you need a third party to confer legitimacy. But with blockchain, that can actually be part of the asset itself if it's issued digitally. So this is, I mean, these are, I think, three really fundamental changes.
Yeah, and then you touched on the T2 to T1 to ultimately T0. That's a obviously very relevant topic right now. We've spoke about that, I think, in the last two webinars we've done, and it's an initiative that within FIX we're part of. And if you look at some of the challenges that are faced from going to T2 to T1, it's predominantly entirely technology driven. You know, the kind of the process is there, the understanding is there, but the technology that underpins the process doesn't allow a lot of the things to be done same day. So you're definitely right on that. A T0 would look a lot easier to achieve if people were to start adopting something like DLT a little bit more.
I'll probably talk about the worst use case for DLT. So we are talking about when DLT is good. I'll talk about use case when DLT is bad. So it was recently used as a voting platform by an authoritarian government. And essentially, there were two blockchains. One is visible for everyone, and another used for amends, visible only to the government. So blockchain and DLT is not good when there is a single centralized party that controls updates into the system. And in less extreme scenarios, in FMI space, what I see is the frequent implementations where there is a single party and single entity responsible for writing access into DLT platform. When we are looking at the use cases, we need to find use cases where the interests of different entities do not align, because if otherwise it is possible that there is a single organization, a single entity is writing into distributed database, and it is less DLT technology, it is just a distributed database, I would say.
Yeah, and I think, Yusuf, that's a good point. But I think what's happening now is there's sort of the evolution of the FMI and this idea that, you know, again, you don't need a single sort of provider. Effectively, what you have is an administrator who has a rule book, who offers a technology service, but actually it's the actors and the participants within the network who actually validate and you know, confirm and allow for, you know, that single source of the truth. And that interaction, yes, it's hosted by an FMI, but the role that the FMI plays is very different now, or will be very different, right? And again, Martin, I think you're probably more well versed with it, but it's almost like a light touch type FMI, or a lighter touch FMI than what, you know, maybe you've seen in the traditional CCP or CSD sort of space.
Maybe adding to that, and also I think you made this comment in your first sentence there. It is a transformational process that is going on at the moment, yeah. And we at SIX Group, so running the Swiss and Spanish financial market infrastructure, in 2018 there was a greenfield approach to build up SIX Digital Exchange really from ground. Also partly because it is quite often difficult to disrupt and change and introduce new technology from inside and change things. And we need to be aware that most of the established market players, they use the technology that is used. It's still from what I like to call from the 70s and the 80s of the last century. Yeah, discussions around cutoff times, overnight batch processes, and so on. Pretty interesting conversations, but suddenly DLT allows much more things to solve and tackle, and pretty sure that, for example, in the capital market space, securities, bonds, equities, next 5 years will look, and 10 years will look different than the development over the last 5 or 10 years. And this transformational process is pretty challenging for quite a lot of, especially the larger ones. And the easiest and most agile ones, and let's say entrepreneurial driven market participants, they are who understand the story and the potential behind this. They are, I think, that the biggest, they're the early movers, and then they also try to develop and shape the kind of future of this type of development with new products and services. So I think that there is an exciting time ahead of us. And also need to, or have to say and want to say, is that most likely that there are still a lot of ideas spinning around in discussions and conversations and working groups and so on, but some of them still haven't been implemented. So I'm pretty sure that we will see new innovation services, use and business cases which have not been implemented in the kind of old traditional world so far. Yeah. Maybe as a comment to DLT and which good solutions can be seen in the future here.
Great. No, all very pertinent points. So I just want to get on to the next question. We've kind of already touched on this a little bit in terms of how our firm's actually using DLT today, but then kind of looking at that further, excuse me, how does that fit into kind of the FIX landscape? And in terms of the types of firms using it, how are they using it? So if you look at FIX today, if you look through, say, trade allocation, confirmation workflow, you look at the execution space, it's very heavily used in the traditional asset space. We're just about to launch some standards for the digital space. So obviously FIX plays a kind of a very big part in that, but kind of what are other ways in which people can use it today? How are they using it today? And then outside of that, what type of participants are using it? Is it more on the buy side? Is it more on the sell side? Is it more typically retail traders that are now moving more into the institutional space, or is it more kind of vendor or CCP exchange driven? And maybe Basu, we can start with you on that one.
Yeah, sure. Thanks, Lawrence. So look, I guess for me, there's two areas of focus. Really, it's been sort of crypto derivatives. Hate to say it, but a lot of institutions have started looking at or are offering derivative trading. So what do I mean by that? NDF, CFDs, and options. There are some institutional firms who are looking at, the buy and hold sort of EFTs or holding spot. But generally speaking, FIX has really obviously being used by OMS systems and used for sort of post-trade notice of execution messaging. And we're starting to now talk to people about the whole matching allocations, but really the holy grail, and I think someone raised the question about this, is the problem today is everything is pre-funded, and so you have this model where if Martin and I want to trade Bitcoin Ether, both of us have to have the amount of token in our wallets. But actually with institutional execution, we know that doesn't exist today. There's always a credit intermediation or some kind of credit sort of model that's available. So what we're looking at now is to say, hey, how do we link in that execution process and allow for credit intermediation to occur at point of execution, but then have visibility over the settlement and allow for settlement orchestration, whether it's within a custody wallet or a non-custody wallet, or even for example a fiat or an off-chain delivery versus payment or payment versus payment. And so that's sort of where the interesting work is happening now, and a lot of what FIX can offer in that standardization and basically integration or bridge between the old and the new.
Yeah, it's almost a bridge, isn't it?
It's almost a bridge, yeah. It's a bridge between the old and the new, and it's essential because all these institutional firms will have existing enterprise system, existing OMSs that operate on again FIX, Java, et cetera, right? So that's sort of the crucial area, but actually the whole credit linking execution to settlement and settlement orchestration is sort of the holy grail of the next stages of what we're looking at.
Yeah, and yeah, you're right. There is a question that's coming. It's probably very relevant to kind of just what Basu was talking about. Then you did pretty much kind of touch on point one. So there's a question that's come in around today. Nodes require pre-funding in a DLT network, but again, if you look at kind of the traditional space, you have the concept of pre-trade and post-trade credit management. There's different solutions out there, but everything's run off of kind of a credit intermediation model. And then do any DLT networks today include forward contracts, forward settlement, or can current solutions only execute same-day bonds, equities? So there's kind of a second point to that question. So
I think in terms of same-day settlement, majority of the institutional trading, you have settlement either end of day, again, to minimize sort of the liquidity needs. Because if you were settling every single trade, you'd have, token going back and forth. So usually they either settle end of day or, next day. And that's really looking at the crypto space. I know, Martin, in terms of bonds and equities, I know you guys have done a few things in production. Is that same day or?
Yeah, even worse, it's atomic. So right when you did the trade, and if the trade is only done when it gets settled, the security gets delivered and the cash token gets paid. But so let me quickly summarize it. So we run basically an institutional grade B2B model where we speak mainly with banks and securities trading firms to join our private peer-to-peer network. And with that, and with such a kind of membership on the exchange and CSD, it is possible to trade securities, for example, bonds on book, on ledger. And with that, there only is a trade takes place, and if deal is done, only if the digital security directly, as I said, mentioned in my first comment, on an atomic swap basis directly gets exchanged versus the tokenized Swiss franc, for example. So we have process in place, first of all, to tokenize the Swiss francs. And then in a second step, there's a pre-funded trade and settlement takes place, and the trade only takes place if the settlement with this atomic swap happens and is done. Yeah. So it's not end of day T+0 or so, it's really instant and instantaneously. A lot of can be discussed, a lot of pros and cons. For example, we had to start somewhere. Yeah, we had our go live in November last year, and there is, for example, still the opportunity, of course, to trade OTC, but also type of credit lines, functionalities, features that there is still room for kind of developing this type of features, and that's not necessarily always needs dependent or is dependent on the FMI provider itself. Can also be that banks come up with nice proper solutions, or let's say members joining that network come up with nice solutions where they offer services to their clients, yeah, prime brokerage and so on. So I think, as I said, it's kind of first step that we did, and in our case, it's correct. It's an atomic swap which needs to be pre-funded, and it is instantaneous settlement. Yeah.
Yeah, I mean, that was also kind of like how I was thinking about this, is that, you know, it really depends on who is implementing the DLT, because there's all kinds of different iterations that you can do. And we see, you know, to Martin's point, you start somewhere, and mostly you want to start somewhere really small. You want to start with a process that you understand. You want to start with a process that you are in, you know, relative control over, and then expand that. Yusuf, sorry, I interrupted you. Go ahead.
My take that in evolved our DLT frameworks, it should be possible to implement complex derivatives contracts that will not just incorporate atomic settlement, but will enable to track a long life cycle of the derivatives product. We participated in a number of research projects and hackathons where we were looking to implement, for example, interest rate swaps and other derivatives on Corda. So I believe it should be possible not just to have pre-funded contracts and atomic settlement. So it is possible to use technology when it is flexible.
Great. So if we're good on that one, I think everyone had an opportunity to kind of opine on that one. But we'll jump on to the next one. And Martin mentioned the term a minute ago, tokenization of assets. Again, that's a term that kind of gets bandied around and spoken about a lot. So Martin, kind of what are the key drivers here? Is it kind of traditional flow, you know, derivative type contracts, or is it more of the crypto digital asset space? So we'll start with you on that, and then we kind of got a part B where we'll loop Basu in.
Let me maybe start and focus on the regulated securities space, yeah, because it's kind of one end of the spectrum, and Basu, I think you have quite a lot to say on the other side of the spectrum. So my experience there is, and I'd like to put a different angle on it. So I think what is drivers? I would say the first learning is a kind of implementing DLT and DLT adoption in the regulated space always takes longer than expected. You know, so you have different stakeholders like banks, issuers, investors, all need to feel comfortable. And this transformational process from the traditional space into a DLT environment, and in our case, most of the changes happen within banks. Yeah, so we guide banks who want to join and get member through a very structured process. That takes some time, and also needs to also a bit of changing in the mindset of the people. Yeah, and with that comes the responsibility, maybe, or also the flexibility on our side, that we have to think about what is a good way, and how can such a transition process run smoothly. Yeah, and one example for that is that we have seen the first investment grade corporate bond on our platform, which you can trade on book, on ledger, on our exchange. Was made as a kind of dual part split bond, where you have one bond written in one prospectus, was basically split in two parts. One was the traditional securities identifier, and then listed and issued on the traditional route and marketplace, and then the digital part, which was issued and listed on the new digital exchange. And such type of approaches help, let's call it driver, help market participants, especially banks and issuers, to adapt to this new digital distributed ledger base. And yeah, with that, I would say maybe Basu, you can comment on more complex and crypto space, I guess, on the other side.
I think, look, the FMI space is crucial. It's important, and definitely, something that's required. But as you said, Martin, it does take 3 to 5 years. But actually, what we've seen is, the DeFi space is really, it's been a great vehicle for firms to set up and quickly offer sort of new services, to the general public, let's call it. And really, what's happening now is a lot of the institutions, whether you're a securities PB or an FX PB or a bank, they're starting to look at these DeFi solutions, and they're trying to say, hey, is there anything that we can take from the DeFi space and effectively look to offer services to our customers, and maybe turn it into a what's being called a CFI. So it's a more of a centralized finance model where you build an ecosystem for you and your customers, where, for example, you can look at client onboarding, data management, static data, KYC, AML, and even, to the extent where, if you can have PVP or DVP, for that matter, with, direct with a corporate or your customer, and offer that within a DLT construct where it's effectively a CFI type solution. Actually, there's quite a lot of benefits that, you and your customers can derive for that. And really, that's sort of the next evolution, and that's the interesting area for institutions. So they are looking, some of them, at crypto, but actually it's more around, hey, are there any sort of good use cases or nice DeFi solutions that will help us and our customers going forward? So I don't know if that makes sense to everyone. Lawrence, are you?
Yeah, no, definitely. Yeah. So just on that, are people, is that happening now? Are we starting to see this kind of, you mentioned CFI, there's all of these FI words, but you mentioned CFI. Is the transition to that happening now? And is there anything that maybe is going to get completely left behind because it was just, when you look at it in the DeFi space, it was clearly not fit for purpose, or it's not going to be fit for the institutional space?
No, look, I think what it is a lot of large banks and institutional players are looking at this, even investment managers and buy side firms, and they're looking at some of the the really good things that DeFi has been able to build, and saying, hey, actually, the fact that it's public may not be ideal for me, but if I can create a network and a framework where it's a permissioned network, and maybe I just offer a service to me and my customers, there could be quite a bit of value to that, right? Because again, it's that idea that the technology is allowing you to uplift, your existing infrastructure. So even, you think about things like corporate actions or, the SSI management. There's lots of these sort of processes and use cases that firms today have traditionally built on either spreadsheets or, legacy sort of systems that are difficult and hard to uplift, upgrade, and offer sort of new added functionality for your clients. But if all of a sudden you can have that, the DLT construct in place, and be able to migrate, some of that functionality onto this, new technology, it can open up a lot of opportunities. But more importantly, provide that sort of one source of data for you and your customers. So I think that's sort of the kind of things people are exploring.
Well, I think certainly.
Sorry.
I think, from a platform perspective, because, at R3, we're basically just the Corda platform. I mean, we see both of these things happening. And I think so on the one side, the tokenization of traditional assets, and on the other side, this kind of creation of net new natively digital assets. And companies are using both of these in different ways. I think to Basu's point, DeFi is a good exploratory place where we're seeing new processes happen, because when something is natively digital, you can do things that you couldn't possibly do if it was a physical asset that was then tokenized. So, that's where you see kind of, AMM, for example, which is for us something that we see central banks looking at when they're trying to control, they're trying to figure out how you would control liquidity of central bank digital currency. So that's a potential use case for taking it out of DeFi and using it for this other use case. But I think, where you're going to see much faster adoption is really the tokenization of traditional assets, because that's where you have a huge existing market. It's regulated, it's clear how it works. Maybe Martin disagrees with me on this, but I think, for me, that's where it's the easiest uptake for these sort of traditional firms that are used to doing this and want to move forward with the technology.
Yeah, if I may add to that, and also Basu's comment, my perception and what I see is quite a lot of innovation experiments in the public DeFi space, which is really exciting, and innovation and that would not have been seen in the traditional space, I guess, yeah. So my view on that is that we see a lot of experiments, and some of these innovations most likely will find their way into the traditional space. And some of them make sense, and I guess also some of them don't, but the interesting stuff then moves towards the regulated one. Coming back to Alicia's comment, yes, there is a big, huge market, of course, with existing traditional securities, and that's a huge field that also we, of course, we try to not only explore but work and get this market share up here in the DLT space. The perception in the landscape that we see at the moment is also that there are different, let's say, islands. Look at, for example, securities depositories, and where you have, for example, in our space, purely native digital securities, but also there is a huge existing market out there. And one way could be and will be, from my view, what I see in the development is that we build bridges between these different islands, and then also have, for example, non-native securities, stocks, bonds traded on digital spaces, where you have all the advantages in the post trade and settlement space, the efficiency gains there, plus access to the existing broad market and product range and breadth there. So this combination for a certain transition phase, maybe a couple of years, that we see digital native products and non-digital bonds, for example, or products combined on such a platform. That's a pretty realistic scenario. I think that again, bringing the kind of traditional world into this new technology in this new DLT space, this process is quite interesting and exciting to see the development there. But I think we got also a question here.
We do, yes. We have got a question come through. It didn't come through as an actual question, come through as a message, but the question's come through: how do you see FIX involvement in the crypto settlement / post-trade processes? So purely from a post-trade process perspective, if you look at FIX today, very prevalent all the way through the life cycle of a trade, when you go from allocation, confirmation workflow, right the way through now into some of the settlement space. So we launched a message a couple of years ago to allow participants to agree or disagree to a cash flow. We're now working on what we call settlement status messaging for both cash and securities. And FIX can also act as a bridge as well, because if you look at the crypto settlement today, more times than not, you're settling against a fiat currency. So again, you're going to need some sort of bridge there between the two different types of platforms, of networks. So again, FIX has a very big part to play there when you look at the actual kind of settlement space. And a lot of the big crypto providers today are already heavily embedded with FIX. A lot of that is probably more on the execution side, but when the kind of post-trade processes is being fully defined for the digital asset space, when you look at big institutions getting into allocation confirmation workflows, there's going to need to be some level of FIX layering in there. So that's kind of my view coming from FIX. I'm not sure if, Martin, Basu, Alyssa, Yusuf, you guys have any kind of views on that question before we jump on to
and I guess the way just to think about it is, obviously you're going to have multiple nostros, right? And the question really is, well, how can you most efficiently manage those nostros, right? Whether it's a wallet or your traditional custodian accounts, you'll need to be able to move things around effectively and optimize where things are sitting. And again, there's some components of the settlement space that needs standardization in order to allow for some of that. But generally speaking, you'll have APIs or nodes that you'll need to access. But maybe there's a layer in there that allows you to effectively communicate across your multiple different nostros.
Probably also
Yeah,
as well. Oh.
I would say, like, one story that I think is relevant comes out of trade finance, which is when Contour, which is a trade finance project on DLT for letters of credit, when they did their first pilot, it hadn't occurred to them that there might be an exception. And so it was going through, a couple of documents didn't match, and the entire thing stopped. I mean, this is years ago, of course. In the beginning, this has all been fixed, but there was no messaging built in, and so it had to stop. Everybody had to get off, make some phone calls, reissue, and do that. So I think having messaging built in is incredibly important. I think particularly in post trade processing, what DLT does is it reduces the operational burden of reconciliation, but it becomes really important to continue to have these flows back and forth. So I think it all continues to be integrated.
Great. Yeah, I was just going to make a point around netting as well. I think someone was talking earlier around, if you look at the kind of digital space, it's a 1-for-1. Every transaction's been settled independently. There doesn't seem to be any end of day batch or any kind of intraday batches that are run. If you look at institutional, there's a lot of offset and a lot of netting opportunity there. So that's something as well that may translate over.
Well, if I could actually go in on that, I mean, one of the things that we've looked at, we've done some work on DVP, is the fact that even though with blockchain, with DLT, you can have sort of instant settlement, what it actually allows you to do is have a settlement choice model. So you can make the decision to settle using batch or to settle instantaneously, which in ways that you maybe can't do today. So I think that kind of gets to your point as well. I mean, there's some things that you don't want to have instant settlement. Maybe in the future you will, but right now you don't. And it allows you to have that choice.
Okay, great. Okay, cool. So we'll now get on to kind of the implementation phase. So we've spoken about what is DLT, where are people using it, how are they using it, who's using it, and what are some of the challenges. Let's now talk about kind of the implementation side. And Yusuf, you have a kind of a very good kind of insight into this. So how about we start with you, Yusuf, kind of highlight some challenges that you've seen when it comes to implementing DLT. Is it quick? Is it cost effective? How hard is it to embed into existing infrastructure? So we'll start with you, Yusuf.
Sure. So the main trouble with any advanced technology is lack of understanding. And Warren Buffett once said, never invest in business you do not understand. Good thing about DLT is people know that they do not know about it. So it is, as a new technology, it makes it known unknown. On the other hand, most of technology in legacy FMIs, in post-trade especially, is unknown unknowns due to the lack of testing. So when you have to introduce DLT, you have to integrate it with the legacy thing that you do not necessarily properly understand. So it is a challenge number one. The challenge number two is based on the very nature of DLT technology. It is a distributed system. And as a distributed system, you have the same data replicated across multiple nodes. So first of all, you need more hardware. And also you certainly have higher turnaround times for everything, for all the messages. So you always need to take it into account. So think about 20 milliseconds reconciliation delay once caused a global problem during IPO. And with reconciliations in DLT space, we are talking about a different range of numbers. So it is multiple times slower. And in distributed environment, you always have to expect non-deterministic behavior, and it requires additional thinking when implementing your systems for it. For example, for tokenization, the most trickiest scenarios appear when multiple nodes are transferring tokens to each other at the same time. And the last challenge appears depending on whether you're trying to put all the nodes into a single network operator or if you are trying to distribute them. So if, and most of the FMIs currently are trying to run all the nodes in centralized manner. But in the future, the probability is very high that new use cases will require DLT nodes to be run separately. And it means that all of them can be configured differently. And the number of permutations and differences that appear in such systems, in such heterogeneous system, is enormous, and it is very challenging to do not integration testing, but to make sure that different configurations of the DLT nodes are compatible with each other, to do compatibility testing in a distributed DLT network.
That's an interesting perspective. If I add another angle to that, and kind of holistic view on, for example, banks that consider, for example, implementing DLT, what we typically run is a very structured process to make these banks that are interested to work with us DLT ready on the operational side, legal side, but also technical connectivity side. And with regards to implementation, for example, costs is a big topic, of course, at any time and or every time. And it's less of getting a member somewhere like 6 Digital Exchange. It's the biggest cost block comes within the banks in the project that they, in order to make them or that they get DLT ready. For example, how to run a node, 4i principle on a node, how to tokenize cash, and how is my front office system ready for such a tokenized cash environment? Yeah, and all of these different questions, you need experts. Do you have the right people? And the biggest cost block is really soft costs and the project work that needs to be done within the banks. That's my experience so far with that. Yeah.
Yeah, I definitely agree on all of that. I think one issue to keep in, well, actually maybe two issues to keep in mind. The first is when, Martin, you're talking about, do you have the expertise to do this? I think one of the challenges today is a lot of the IT teams in banks are leaving. I mean, there's a huge turnover because there's a lot of opportunities that require their knowledge and that, are in the crypto or the DLT space. So I think that's, a big concern that traditional companies need to really be thinking about. And I think also your point about plugging into core banking systems. Again, this is not really specific to DLT. It's kind of anytime you have a new technology, how are you going to tie it together? But it's a pretty significant issue, and it's often very unclear how to do that.
Yeah, I think oh, sorry, was that you, Basil?
Sorry, no, I was just going to say, yeah, I totally agree. I think firms, rather than it being a big bang sort of approach, I think that there's sort of a control path and a control, route to DLT, and it will take time. I think that is the reality. Sorry, Lawrence.
No, I was going to say something largely similar, but also, yeah, just to piggyback on what Alyssa said about, kind of the great resignation of, people effectively leaving jobs they've been at for many years at big global banks, big hedge funds, because they want to get more into the DLT and the advanced tech side, and also probably because they're being offered considerably more money because there's just so much interest in that part of the industry. Got one question left, just kind of mindful of time. We've got about 6 minutes left, but what we're going to do on the last question, we'll do another little round robin. So we did at the beginning, what does DLT mean to you? One word, one sentence. Now the round robin, where do you see the adoption of DLT in the next 2 to 3 years? So if you look at where we are now, let's just say the next 2 to 3 years, where do you see that continuing to adopt throughout a lot of the big banks or the big asset management firms? We'll start with you, Alyssa, then we'll kind of go round. If we keep it to 30 seconds each, and then that should give us a minute or two at the end.
All right, 30 seconds. I'd say 2 things. I think the first thing that we're going to continue to see is an expansion of the variety of assets that are out there in the market. So, SDX, like Martin's company, have already started this. Some of the assets are tokenized versions of things you already know. Some of them are net new. But that is absolutely going to continue. I think it's unclear which of those are going to be successful. But it's going to continue to expand. And then I think also to the point about interoperability, this is going to move much faster. This is a question that people have been asking for years about blockchain, whether it's interoperable with all of these other things. It didn't make sense in the beginning when the focus was really about implementing a new technology, what could it possibly do? But now that it's becoming more standardized and sort of more invisible, that question is I think going to be solved in the next 2 to 4 years.
Right. Let me continue. Yeah, happy to do so. Let me continue. So first of all, I see bridges between the different marketplaces, traditional DLT, digital ones. Yeah. So building these bridges, that will be an interesting development over the next 2 to 3, 4 years. Secondly, very interesting topic is tokenized cash, because suddenly you have a cash token on a DLT, which kind of is one-to-one backed by fiat money. And there are a lot of use cases. For example, think about collateral in the collateral space of crypto derivatives where that can be used. And thirdly, I would say interesting is that quite a lot of market participants, they look, investigate, explore what they can do, and a lot of things market participants are waiting to see. And there will be an inflection point, yeah, where there needs to be a demand and also a force to get DLT ready. And that will be a very interesting point, because then suddenly everyone pushes into the market. Get the right people will be difficult, getting onboarded on time. So that's also a very interesting point in time that I'm looking forward to. So, and with that, Basu, maybe.
Yeah, and thanks, Martin. I agree with everything both you and Alyssa have said. I think for me, I would love to see, and I know this is sort of a pipe dream, but I'd love to see a peer-to-peer market in repo and sec lending. I think it's probably 5 to 10 years away, but that's sort of the holy grail, this idea where an investment manager can trade directly with a hedge fund. I think that's sort of the power of DLT and what it can bring to the financial markets, really. And I'm not saying we completely, disintermediate the banks or, the custodians or the whole banking network, but actually, that sort of opportunity, is now a possibility, or will be a possibility 5 to 10 years down the road.
Excellent. And Yusuf, anything else to add to that?
My take is use cases where multiple parties have simultaneous right access and where their interests are not aligned. So these are the real use cases for DLT platforms, and I hope to see quite a lot of them in the next years. Thank you.
Excellent. Thank you all. So I think we've got just a couple of minutes left. We don't have any more questions that have come in. I think we've answered all of those. We've answered the questions. Amy, do you want to just quickly bring up the last slide? We have some other events coming up. So just while we've got everyone on the line, we've got a list of other events kind of approaching. All of our events, we cover kind of a global reach. So we've got some coming up in the APAC region over September, November. We've got an Amsterdam one in October. In New York, so for the US participants, we have our in-person conference. We've just announced that, 8th of November. We're looking to have around 300 in-person participants there, and that's the first one we've done in New York since Boston, I think it was in 2019. So anyone that was at the last Boston one, like I was, remember how good that one was. This one's going to be bigger. Like I said, 8th of November, if you're interested, please do reach out. And then we've got one in Australia, and of course the big EMEA one has already been penciled in for next March as well. So if you want to get involved, please do message us. You can see it on our website and reach out to any of the kind of the Fix folk, including myself, if you want to be included. Great. Oh, and yeah, here's some of the initiatives as well. I should probably touch on this. So we have a whole host of different working groups. Some of you are in some of these working groups. We have the post-trade working groups, we have the repo working groups, we have sec lending working groups, we have digital asset working groups, we have a whole different list of working groups. And off the back of that, there are a number of initiatives within the industry that kind of play into those working groups. We spoke about T+1 today, we spoke about digital assets. We've got some other stuff around ETF standards, as well as all of the payment and settlement messaging, which does tie into one of the questions we had around the settlement of crypto and how post-trade would be impacted by DLT. So thanks for joining, everyone. Again, thanks to R3 for your sponsorship. We'll send out a summary after these events, and also the recording will be on our YouTube channel probably a week or two after this. Great, thank you to the speakers, and everyone enjoy the rest of your day.